Hi friends, so let's start today's analysis. I think it's slightly going to be a longer video because we have two broad things to discuss: American markets, which is global markets, and again the Indian markets because of budget. So we quickly start with the US market. So after a close, the futures were in green, whether it was Nasdaq or Dow, but we actually had a session which was ultimately the opposite of it, and the indexes closed in red. US markets are waiting for the data for inflation, which is the PCE data, personal capital consumption expenditure data from US. This is the data which the Fed tracks for their decisions on inflation the most. So they were expecting a growth of around 2.6% on the inflation, but it came to 2.8%, which was slightly higher. And that is because the dollar index went up. Dollar index were around 0.7 points above. And also we saw some inch up in the bond yields. These two parameters also increased because of sanctions which came yesterday. So we were expecting sanctions will come today night, but some announcements were done yesterday night itself. So 25% tariff has been announced on Canada and Mexico, which we were expecting, and 10% on China. These are the tariffs that have been announced by Mr. Trump. We'll see some more updates today, and we'll see some updates from Canada, Mexico, and China probably on Monday. China markets, anyways, if you remember, they are closed for 1 week. Probably they are opening on Tuesday because of New Year. So, because of these two things, bond yields were touching around 4.55 and dollar index closed around 108.2, which is again on a higher side. So, these two parameters were on the higher side. The markets, that's why on the intraday basis, it was touching in green at one point of time. Dow was above 150, 200 points, even Nasdaq was above 150 points. But ultimately, after the sanctions news and this personal consumption expenditure data which has come, all the three indexes closed in red. This trade war can take some steam in 1 or 2 days to come, let's say Monday or Tuesday, and then we'll wait and see how exactly it folds out. But probably whatever he has announced till now, he has taken into action, and that has been implemented. Remember, in the election rally, Mr. Trump has been talking about putting sanctions on China to up to a tune of 60%. We just started on 10%. Nothing rhetoric or nothing as such action happened on our markets because of this news. Because all the indexes closed in red, we edges Nifty was showing 100 points down, but we opened up. We opened in green today in the pre-market trade. So we completely neglected the news on whatever Trump has taken, and that is what I was talking about to you yesterday also. That the impact of these sanctions on Indian markets and Indian companies is very very limited. So that's about the global markets, the data which is there, and we've seen how it will impact. And we continue to track on US markets how it comes. There were results from Apple which has come good, and the stock was doing good. Apart from that, nothing much from the global market as of now, as many of the markets were closed. Now come to the Indian markets, which we all are waiting for, the event which is the budget. Now, in budget, see, if I talk in detail on budget, it will just become a long video, and probably this video is not on the budget; it's on the market. So we'll just pinpoint some of the important things. So when the budget was going to be announced, before that, Nifty was around 120 points up, and Bank Nifty at one point of time touched 400 points up. And even when the speech started, the market was still not feeling nervous, and we were maintaining these levels. The first nervousness which came into the markets was when they saw the data on the fiscal deficit, which was announced by the finance minister of 4.8 for this current financial year, and for FY26 4.4. Now this is something which actually worried the markets because they thought they are into fiscal consolidation, but they are into too much of a consolidation. The market thought this will not give the room for government to spend too much, which they actually want the government to spend on the infrastructure part. So that is why we had a huge dip into the market. See, remember, as of now, the fiscal deficit is around 4.9%. That was the target which was given. So even if we would have maintained a 4.9%, the market would have felt okay, and even the market would have not reacted to it because we are maintaining what we have said. And anyways, the projection for FY26 in the previous budget was for 4.5% FY26. Now we have tried to give a figure which is lower than that. For FY26, we have given 4.4, and for this financial year, we have given 4.8. So this is what market didn't like, and we had a huge dip. So Bank Nifty went around 400, 500 points down, and Nifty also went around 150 points down. We had a very sharp fall into the markets. The market only revived certainly to a certain extent when they saw the income tax, personal income tax slab being changed, and the minimum taxation salary which was changed. So now, as per the new announcement, as everybody knows now, it's a talk of the town. Up to 12 lakhs of income, you have no income tax at all. And the other slabs have also been rationalized, and the new slab has been introduced between 15 and 20 lakhs, which we were expecting. So this actually brought a lot of enthusiasm in the consumption sector, hotel sector, your airline sector, your other platform sectors, delivery system, all those expenditure related thing which we're thinking about, that a certain amount of disposable income will come into the hands of people. So a ballpark figure says the 90,000 amount of rupees will be saved for a person who has a salary of around 25 lakhs or above CTC. So that amount will be spent in movies, in food, in restaurants, in holidays, tourism, and all this kind of thing. And that's why these stocks were showing some action. And the other stocks which were related to the budget were showing downward trend. For example, the insurance companies wherein the FDI limit was increased from 75 to 100%. This talk was going on from last 6 months or so, and today it has been announced that the FDI limit has been increased from 75 to 100%. There was a sharp fall in the insurance companies, but later on they reversed, and they almost recovered their entire losses. So this was the analysis on the market movements. But now, if we have to summarize how the budget has been and what is the longer term impact on the market for the budget. So my analysis is this: if I just want to find out some things which is negative, so what are they? So first let's say what are the positive things. So fiscal deficit has been reduced to 4.4% for FY26 and 4.8% to FY25. Now, generally, the FIs and the foreign players actually want India to move towards or advance towards fiscal consolidation. For them, it's not a negative news. For them, it's a positive news. So they will like it. Another thing which the market wanted was that there was a lack of urban consumption, there was a lack of spending, and this was quite visible into the results of most of the companies. They were seeing that we are not seeing consumption, we are seeing a downturn in consumption, the money is not being spent. That also has been solved. Now the tax slab has been raised from, people were expecting that the 7 lakhs will be increased to 10 lakhs. That is the minimum slab on which the income tax is applicable. But that was increased to 12 lakhs, which was actually revolutionary and was surprising for the markets. And probably it has solved many problems because it has now given you disposable income. So that is also a tick mark, and probably that is also good news. Third thing was the capex expenditure, that what will the finance minister do on the capex expenditure. It has been kept flat. So it is not a negative. It is kept flat. Remember, we have not been able to spend our infrastructure part, or let's say the spending on infrastructure or capex, which is announced for this year. Considering those things, even if we do for 11 lakh crore, which is announced for this budget, I don't think it's negative for the market. It's a huge money which has come up. Moreover, now due to disposable income which has come into the hands of the people, and if this money gets converted into economic upheaval, which means that the capacity utilization as of now, which is stagnant around 75 to 77% from last 5 to 6 years, maybe with this expenditure and extra consumption, those capacity utilizations goes up. If that happens, probably we'll be looking for a capex driven from the private sector, which has not happened for many years. See, remember, anyways, we can't expect only government expenditure to go up, only the government capex to go up. This is not the way of reviving the economy. This is not the best foot forwards. We always want the government capex and the private capex to go hand in hand. Sometimes actually we want the private capex to go up because government funds can be utilized from many other schemes. They can be utilized to bring up new sectors, new platforms. They can be given as a tax soaps to many people on the foreigners or FDIs who wants to invest in India. So that money can be utilized on probably healthcare, education. So there are many sectors where this money can be utilized if at all the expenditure of government on capex goes down, because anyways the tax collections are very buoyant. But private capex has not been happening for last 7 to 8 years, 10 years. Probably this slight reduction on capex, but the gift which the finance minister has given on the consumption part in terms of this tax reductions, I think that's a great plus. So for me, that is also a plus point. So the three things or three pillars which we always want this budget to be evaluated on, which is the capex, which is the fiscal deficit, and the whatever the prudence has been given on income tax, I think it's a thumbs up. So what is negative now? Negative is that probably the fiscal deficit could have been kept at 4.5, and that extra 0.1% could have been given as an extra capex. Uh, the problem here is that we are entering into a currency war. We are entering into a trade war. The Trump factor has come in. So anything can happen. If at all we don't show a big fiscal prudence, probably the foreign money will continue to move out, and that will put pressure on our rupee even more. So, in considering those aspects and considering the global trends, probably I don't see this as a bad trend. This will not allow, or probably it will allow the money from foreign players to continue to come to India. For example, the bond money which is coming into the market, that probably the money will still continue to flow in India. So, considering all these things, probably I won't say that's a negative. Moreover, 11 lakh crores of capex is good enough. In India, it is not easy to absorb these kind of high capex levels. We have not been able to absorb in past years also. None of the years we have ever spent capex of 11 lakh crores. So let's see how it goes. And moreover, if at all the government will feel that the capex is being utilized very well, it's not that you will be very sticky on those fiscal deficits. It can always increase. So probably you can take it to 4.5 later on. For example, 9 months down the line, you see that the capex which we have rolled out is getting utilized and it is converting into good economic factors and it is giving you a growth. Who knows? The government will say, okay, fair enough, I'll take a beat on 0.1% of fiscal deficit, but I'll give the money to the infrastructure because that is giving me a higher returns in terms of growth. Moreover, up to that time, we would have seen how the Trump trade will play out, and 15-20 days we'll have full clarity on how these things will pan out, what the currency war, to what limit it will happen, and the government will have full cognizance into it, and we can take much prudent and cognizant decisions on that. Second negative, which people thought was there was no reforms announced in terms of land reforms or let's say labor reforms or agricultural reforms. Yes, that has not been done, and it is not easy in a country like India, which is politically driven, election driven economy, and I don't think in many of the budgets it has happened. Moreover, the market was not expecting anything on it. So it's a negative, but I don't think it is affecting the markets. Apart from that, one thing which has happened very good in this budget is that this budget has been decided after doing a very detailed survey. They have taken input from all the industries and they have given something for all the industries. So whether it is health, whether it is education, agriculture, small startups, IITs, fish, poultry, you name a sector in India, and everything has been touched. Steel sector, import duties, every sector has been touched to a certain extent as much as possible, which means that the lot of impetus has been given on the budget findings. Inputs were taken from the industry. After a lot of deliberation, this has been done. Apart from that, some of the good things which has happened is that shipping industry has been termed as an infrastructure sector, so it will get its soaps accordingly. Moreover, if you're setting up the IITs and all, they will also be treated as capital expenditure or capex or infrastructure. Those again advantages will be there. Import duties have been reduced on steel and other things, which because they were costly in India. So many of the things have been done on small part. There's again a taxation bill will be now coming in 1 week or time. This is again to reduce the complications or to make it much more simpler. So government is working on that as well. So probably if you see, I would not give this budget a very negative marks. Probably for me, this is a positive. Yes, there will be a circulation of sectors now. The bigger themes of railways and infrastructure and you know your defense and all these things which were giving good returns. Probably there will be a small requirement of churning of your sector. You have to choose your stocks according to the budget. That's the only thing. But from index point of view and from the overall standpoint of the budget point of view, I don't think there was anything negative. Moreover, there were no change in any of the taxations, long term, short term. So nothing was discussed on long term capital gains, short term capital gains. Nothing was changed, which means that the government want to make it stable for some years to come, let it get absorbed, and frequent changes were avoided, which is also a good thing. So If I have to see on the perspective of markets, I would say that this has been a pretty neutral budget. Today there was action. The action was less because it was Saturday, probably it was holiday for some of the players. We might see a lot of action on Monday when all these announcements, probably some more announcement, if at all, had to come from Trump camp, would also be there, and the full-fledged FIs will be there on Monday to absorb and to react on the budgets and taking forward. According to me, I don't think there is anything negative on the budget which should actually cause our lower levels which we made in January, 22,800 or let's say 47,000 on the bank nifty to be touched once again. I don't see any reason for it. Whatever dollar index had to react, that has also gone up. A lot of sanctions have already been put up. So market has swallowed, sorry, market has already digested a lot of data. Last week onwards, a lot of data has been continuously coming. Today also there was a heavy data day. Now the market will actually focus on the RBI policy, which is on 7th, and I think a rate cut from that is probably imminent. That is for sure. It will be coming. So the government has given you impetus in terms of disposable income in the hands of people. They have tried to revive the consumption part. If at all they do one more rate cut, which will again ease up the liquidity part, it will bring down the credit cost lower. That will again be a boost for the Indian ghost story moving ahead. So I think these two things combined, I still see market positive from here. I don't derive anything negative from this budget. It has been a neutral budget, but slightly tilting towards positive size. So let's see how the market reacts on this full flesh on Monday. We'll have a, as the market is closing on Monday, we'll get a full glimpse of how the bigger players have taken into consideration this budget and how the markets will pan out on Monday. But according to me, the lower levels remain protected and we should see upside from here on. Considering that the Trump factor is slightly getting diluted now, budget has come pretty neutral to slightly positive part, and we'll see a good policy from RBI also coming in the coming week. Considering all these factors, I think the market should gain some more legs from here. But let's see how it goes on Monday. We'll keep a watch on it, and I'll be there anyways to discuss whatever things I know. So thanks so much for your time. Thank you so much.